Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here at Ausbiz. So let's take a look at what went on overnight. Largely negative on global markets as renewed fears of a global trade war unnerved investors, and that saw gold soar to another record high. On Wall Street, a downbeat forecast from retailing giant Walmart dampened risk appetite, with the Dow falling heavily, the S&P 500 pulling back from its recent record. Well, Walmart, the world's largest retailer, provided current fiscal year sales and profit forecasts that fell short of analysts' expectations, which suggested a dampening of consumer demand. That sent shares of the other retailers, Target and Costco, lower. The big banks have also taken a tumble, with Goldman Sachs and JP Morgan down heavily. Palantir Technologies, which provides governments with software services, fell after the Pentagon said that it's looking at potential budget cuts for fiscal year 26. And US listed shares of Alibaba jumped following the Chinese e-commerce firm's consensus beating third quarter revenue, while Hasbro shares surged after the toy maker beat quarterly profit and revenue estimates. Well, the latest commentary from US Fed members has emphasised that policy should remain moderately restrictive until it's clear inflation is on track. Raphael Bostic saying that he expects 2 more rate cuts in 2025, though uncertainty around that projection has risen. While Austin Goolsbee has said before we got to the uncertainties from policy and from geopolitics and from some others, the overall thing looked pretty good to me. The unemployment rate at 4%, inflation has been coming down on a path to 2%. Well, the latest economic data shows a modest increase in US jobless claims, and a survey from the Philadelphia Fed showed its measure of prices paid by factories increased to their highest level in more than 2 years in February, while the business activity index fell sharply. US Treasury yields have edged lower after Treasury Secretary Scott Bessent said in a near-term change in increase in the size of longer-dated debt auctions is not planned. The yield on the 10-year note was last down at 4.51%, the 2-year at 4.26%. And the US dollar has fallen against the major currencies, while the yen has risen to an 11-week peak on the prospect of further rate hikes by the Bank of Japan. The Aussie having surged around 1%, now at 64 US cents. And Bitcoin has climbed to over 98,000 US dollars. On the commodities front, oil prices have edged higher on larger than expected drawdowns in the US. Brent futures up around 0.5% at $76 a barrel. Copper has reversed its recent declines to be up 1%, while the iron ore prices jumped almost 2% to 109 US dollars a tonne. And gold has surged on more safe haven buying, taking it to around $2,937 an ounce. Well, let's get more on what we're seeing, particularly stateside. Brad Gasworth joining us from Unearthing Opportunities. Brad, welcome back. Good to see you. Ongoing uncertainty in regards to Donald Trump's policy, certainly with regards to tariffs. Now he's looking, of course, of slapping a 25% tariff on those imports for particularly cars, pharma, semiconductors. How's that playing out?
Yeah, no shortage of dull moments here in the United States. Certainly the tariff conversations have happened for some time now. The number has been, back and forth. Would it be as high as 25% or higher? Would it be lower, around 10%? But ultimately, I think everybody's expected tariffs to take place. Some of the news coming from conferences here, a lot of companies have started to prepare already from the import side. So there's been some preparation. And ultimately, the sort of the feedback from these companies is they are planning to go ahead and share that cost to the consumer, which that's the major concern. If prices go higher, will it follow through and go to the consumer? And if it does, you're going to see prices higher, and that's going to hurt purchasing here. So it's something we have to pay attention to. I certainly believe we'll see a handful of tariffs across the board. The big question remains of what percentage rates.
Well, of course, it appears that Donald Trump, the whole idea here is to encourage companies, or force them perhaps, to onshore, to shift production to the US. Any signs that is likely to happen?
So not really, and Andrew, it's a great question. I don't think it's likely to take place, and it's certainly not going to take place that quickly. I think the mindset is right. I mean, he does want things back in the States to make America great again, per his quote. But ultimately, I mean, for semiconductors, you have the leading fabs that are outside of this country. I'm sure we might bring up that Intel breakup news, and getting Taiwan Semi over here. I mean, that's and in expanding operations. That's a positive for the United States because they are the leader in chip manufacturing. But ultimately, yeah, I don't see it happening and bringing more things to be made here. It's not that easy to do, and quite honestly, the quality that's come from the States has not been as high as it's been overseas.
Yeah, just on Intel, as you mentioned there. So what's going on, particularly with the involvement of Broadcom and Taiwan Semi?
Yeah, Andrew, and this has been something that has gotten a lot of headlines over the last couple of days. So Intel, obviously, for it's no secret that they've been underperforming for quite some time. There's been articles out there that there's been exploration of Broadcom and TSM taking over parts of the company, if not the entire. TSM would take on the manufacturing part, and Broadcom taking on a lot of the chips. If you look at the manufacturing side, TSM is by far the biggest. They are the best. Then next is Samsung, and then far below that is the Intel. So you go ahead and you sort of you take care of that operations. More of those operations would be in the United States for Taiwan Semi. It makes a perfect sense, in my opinion. On the Broadcom side, Hock Tan, the CEO, has done an incredible job over the years integrating acquisitions for Broadcom when he was CEO of Avago, and then did the big Broadcom merger. He's been incredible with taking on companies, and I think that would be a big positive for Broadcom. Ultimately, I think Intel needs to do something because they have not done well strategically, and they have not hit targets as they've expected.
Brad, elsewhere, Nikola filing for bankruptcy. What happened?
Yeah, I mean, I don't think this is a major surprise, Andrew. I mean, ultimately, the company's had struggles. They've overpromised a lot, and they've really underdelivered. I mean, the costs were quite prohibitive, and they weren't able to raise money to keep it afloat. So I think investors had enough is ultimately the end result there. Investors were not willing to put up more money for significant losses, and they did not see that that company in the long run. So I don't think this is going to be the only one in the EV space. A lot of them still are losing a significant amount of money because production numbers are so small. What you've had is some of them like a Rivian that's had major partnerships with a Volkswagen or some of these others that have also made major partnerships. Those will keep those companies around and survive. The ones that aren't able to do it are going under, and that's what's happened with Nikola.
And elsewhere, Brad, Apple making a pitch, I guess, for those budget-conscious consumers with the new iPhone.
Yeah, so Andrew, I mean, it's Apple's been bringing a lower cost iPhone for a number of years now. So this isn't a major surprise. It's not that exciting of a phone. It doesn't have, the bells and whistles as their Pro series. But ultimately it does hit, a lower price point. So you get maybe more mass market adoption. Now, if you ultimately get a bigger shift to this price point, that hurts margins for Apple. So that's something we have to watch. Alternatively, the concern I have with Apple is really their exposure to China. I think the iPhone, let's say the relations there do not get better, and if they actually escalate, there's a chance that China says, you know what, no longer, or maybe they tariff and have a huge tax on iPhones going to the region. So I think it's something we have to watch, even though they manufacture a majority of them. I think it's something that there's more risk to the downside than the upside coming from China with Apple.
Brad, just touching on those latest results with a focus clearly on Walmart, the largest retailer there. What did you make of that, and what is that telling you about the state of the US consumer?
Yeah, perfect question here, Andrew. I mean, this is, I think, really probably the trillion-dollar question right now. I mean, Walmart numbers were not that impressive. I mean, the stock took it on the chin a little bit. And ultimately, I've been saying this for a little bit of time now. I think the market here is not as robust as people have thought from overseas. I think the job market is troublesome. I think there's been You know, we've heard about the significant layoffs at the mega cap companies here in the United States, but there's been a significant amount of cuts from the mid tier as well. Also now on the federal side, there's been some reductions. I think the job numbers that are going to come out this month and next are going to look really bad, and I think ultimately, if there's a job issue, that's going to hit the economy. Now, there's some very robust things that are happening with crypto and some other areas with AI. But the question that we need to watch is it enough? Will that be able to offset the weaknesses we're seeing at other places? I don't know the answer to that right now. I think we're more in a troublesome state. So I think this actually might give fuel to the Fed on the rate cut, not this next meeting, maybe in the future. But then the issue there is inflation is likely to happen because of tariffs. So, there's a lot of cross currents we got to watch. I think right now, from a market perspective, it's going to be quite volatile. I still love, having exposure on the precious metal side. I sound like a broken record here. I think investors must have exposure to gold and silver.
Brad, great to get across what you're seeing stateside there. Thanks so much for joining us from Unearthing Opportunities.
Thanks, Andrew.
Let's refocus on what we're likely to see here at the Open on this Friday. Looking to buck that trend we've seen over the past couple of sessions. Of course, some heavy selling we saw on the market yesterday, certainly off the back of some results which appeared to surprise the market. So SPI futures up 0.25%. Stay with us. The Open is a couple of minutes away.